All right, today we're digging into a fantastic playbook from AlphaV Research. It's all about finding a massive growth opportunity that's kind of hiding in plain sight, right in the middle of all this market chaos. So let's just start with a number, 29. Right now, this single number basically defines the entire market's mood. It's today's score on the Fear and Greed Index, and it puts us smack dab in the fear zone. We're going to talk about what that means, and maybe more importantly, what it doesn't mean. You know that feeling of fear leads us right to the core philosophy of this whole analysis. It was captured perfectly by the legendary investor, Sir John Templeton. The time of maximum pessimism is the best time to buy. It's all about flipping the script, right? Seeing fear not as a warning to run, but as a signal for a huge opportunity. So, first things first, we need to really understand the psychology of the market right now and look at how, historically, the smartest investors have used these moments of panic to set themselves up for incredible profits down the line. So, what kicked off this latest wave of fear? Well, rewind to October 10th. The markets just took a nosedive. The trigger? A lot of geopolitical noise, including some really serious threats about a potential 100% tariff on China. And just like that, investors flipped a switch to risk off, and uncertainty just shot through the roof. So what exactly is this fear and greed index we're talking about? Look, it's not just some vague feeling. It's a real, data-driven tool that actually quantifies how investors are feeling. It looks at 7 different factors, things like market momentum, how strong stock prices are, and even the demand for risky junk bonds to give us a clear, number-based reading of the market's emotional state. Now, this is where it gets really interesting because you have to see the critical difference here. Our current score of 29 puts us in fear. The recommendation? Keep an eye on things, monitor for long-term positions. But that's not the real signal. According to the Templeton strategy, the true buying opportunity, that point of maximum pessimism, is extreme fear. That's when the index drops below 24. We're not there yet, but that is the number to watch for. And this just brilliantly highlights another one of Templeton's famous warnings. The 4 most dangerous words in investing are, "This time it's different." The idea here is so powerful. These market panics, they're almost always temporary emotional reactions. In the long run, it's the fundamental trends that almost always win out. Okay, so that's the when to buy. Now, let's get to the really exciting part, the what to buy. This research points to a multi-trillion-dollar opportunity that's just starting to take shape, and it's called physical AI. To really get this, we need to see where AI is going. NVIDIA's CEO Jensen Huang breaks it down beautifully into 3 phases. Phase 1 was generative AI, ChatGPT, all the stuff that creates digital content. Phase 2, which is emerging now, is Agentic AI. This is where AI stops just answering prompts and starts to perceive, reason, and plan on its own. But the final and biggest step is physical AI. That's when we take that agentic intelligence and put it inside a robot, allowing it to act in the real physical world. So let's be super clear. Physical AI, or what some people call embodied intelligence, is basically the moment that advanced AI gets a body. It's about taking artificial intelligence off of our screens and putting it to work in the real world, doing complex physical jobs. And who's laying the groundwork for all of this? Well, you have to look at NVIDIA. They're essentially building what you could call the AI factories for this revolution. They're providing the critical simulation platforms like Omniverse, world models like Cosmos, and physics engines like Newton. These are the virtual training grounds where robots can learn safely before they ever make a move in the real world. But this isn't just a story about one company. Not at all. It's an entire ecosystem. And if you want to invest successfully, you've really got to understand all the different layers that make it work, from the AI brain all the way down to the robotic body. And make no mistake, this is not some far-off futuristic theory. The big money is already moving. Just look at October 8th. SoftBank announced it's acquiring ABB's industrial robotics division for about $5.4 billion. That is a massive flashing signal that the industrialization era of physical AI is already here. This table is a fantastic map of that ecosystem. So up at the top, you've got the intelligence layer, the brains of the operation, with companies like NVIDIA and AMD. Then you've got the body layer, which is the physical hardware from robotics giants like FANUC. The control layer acts like the nervous system, connecting the brain to the body. And finally, the application layer is where it all comes together to solve real problems in logistics, medicine, you name it. So with that map of the ecosystem in our heads, let's zoom in and look at some of the actual companies that are leading this revolution. Yet, let's just spotlight a few to show you how wide-ranging this is. In intelligence, you have NVIDIA, the undisputed king of AI infrastructure, with AMD coming in hot with its own powerful chips. For the body, think of Japan's FANUC, a true titan of industrial robots, and Keyence, which makes the super precise sensors that are basically the robot's eyes and ears. Then, in the application layer, you get companies like Embodied, who are completely changing the game in warehouse automation for giants like Walmart. You have Intuitive Surgical, whose Da Vinci robots are already in operating rooms. And of course, you can't forget Tesla and its huge vision for the Optimus humanoid robot. Okay, so we know the when and we know the what. Now we get to the how. Let's walk through a really practical strategy for how to act when that perfect moment arrives. Now, for anyone looking for a simpler, more diversified way in, ETFs are a fantastic option. And what's cool is you can even tailor your approach. For example, the BOTZ ETF focuses more on the body, industrial robotics, and automation. But the IRBO ETF is more focused on the intelligence, all the AI software and chips. You can pick your lane, or you could combine them to capture the entire trend. So if we boil this whole thing down, the research gives us a really simple three-step plan. Step 1, be patient. You have to wait for that extreme fear signal. Step 2, think long-term. This isn't a quick trade. It's a 5 to 10-year play minimum. And step 3, diversify. Spread your bets across the intelligence, body, and application layers, whether you're using stocks or ETFs. Of course, no investment is a sure thing, right? It's absolutely crucial to be aware of the risks. Things like the technology just taking longer than we think to roll out, or the competition between giants like NVIDIA, Google, and Tesla getting even more intense. And then there's always the risk of geopolitical problems or supply chain meltdowns. And that brings us to the final and most important question. This entire strategy, this whole playbook, it all hinges on being prepared to act with real conviction when everyone else is running for the hills. So the question for you is, when extreme fear finally hits the market, will you be ready?